In today's video, we're going to be focusing on the Pi Cycle top indicator and an update on what's been going on when it comes to these two moving averages, as well as a crossover, which will signal the end of this Bitcoin bull market. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into today's video. So this orange moving average is always going to act as a support, especially in the halving year. And we've seen that time and again earlier this year, and once again here this May, we've managed to hold this level as a support. But at the same time, on the flip side of that, this green moving average is going to be acting as a resistance, as it tends to be the case historically. In the pre-halving year, we got this rejection, but that's a pre-halving year. In the halving year, we tend to see reaccumulation just below this region before price expansion inevitably occurs. So we did reject from this green moving average. We've managed to find support at this orange moving average, and we're just going to be reaccumulating between these two moving averages in what is essentially a post-halving reaccumulation range for Bitcoin. And essentially, we've managed to rebound from the orange moving average, which is approximately at 60k. We know that we deviated below here into 56k. These downside wicks aren't going to be visible, but we've actually seen this green moving average, because it's a dynamic one, increase in the price action that it represents. So 82k is going to be the resistance that we need to break later on in the cycle. We'll probably break beyond it, as we've seen in the past multiple times across history. But we have to know that we rejected from 71, 72k back here in March, and now we're going to have to break beyond 82k later on in the cycle. So that's something to keep in mind. But what's also important to keep in mind is these two moving averages on this recent bounce to 65k. These two moving averages are going to be flicking up, and we are seeing some flicking up in the more sensitive moving average, which is the orange 111-day moving average. If we propagate these into the future, we'll learn that this bearish crossover in the Pi Cycle top indicator is going to occur in late September 2025, which is right bang on with the halving cycles, because historically after the halving we tend to see a bull market peak 518 days to 546 days after the halving. And if this is going to continue in this cycle, 518 days after the halving is going to get us into mid-September, and 546 days after halving is going to get us into mid-October. So the fact that we're seeing a propagation of these moving averages take us to a late September 2025 bull market peak, well, isn't that right bang on between these two levels essentially? So technically, according to the Pi Cycle moving averages, we are on track for a regular halving cycle. But of course, we know that as we continue to move towards the upside, these two moving averages are going to converge more and more. So that means that we'd probably get a crossover much quicker. But what these two moving averages are blind to is the fact that we could still see upside, we could still see downside. Maybe we just see sideways price action, and these moving averages are going to be reacting to those price moves, and as a result impacting different crossover scenarios in the future. If we go towards the upside, then this crossover scenario would probably occur somewhere here in April. If we drop, then maybe we push the can down the road and the bull market peak occurs in December 2025, for example. If we move sideways, then we just essentially maintain this bull market peak scenario of essentially September 2025. But whatever the case may be, the Pi Cycle moving averages are suggesting to us that despite this rate of acceleration of 200 days, because remember, in March of this year, we were accelerating by approximately 260 days, but because we've been in this 60-day reaccumulation range period, we're now down to rate of acceleration of 200 days. So because we're 200 days accelerating ahead of the traditional halving cycle, the pi cycle top moving averages are essentially suggesting to us that, well, there is no rate of acceleration. We are on track for a typical traditional halving cycle, and maybe that is going to be the case, but how can the pi cycle moving averages know that ahead of time? Because we need to see this reaccumulation last for 200 days more. And we know that we could, if history repeats, we could see this sideways accumulation take place for approximately 120 days, 120 days, 130, 40 days, longer, because this was a 160-day reaccumulation period, this red box. This red box was approximately 150 days. And now we are 3.5 weeks after the halving, so that's approximately 25, 26, 27 days. So we could reasonably see 130 days extra of consolidation towards the sideways, but that would still leave us with 2 months of rate of acceleration. So these two pi cycle moving averages are going to continue to change, and what we really need to be focusing on is essentially these 2 points, and it really just boils down to these buy areas being the orange moving average and any downside wicks below there, and the green moving average is essentially the resistance that needs to be broken, but on confirmed breakout, this is where we can reaccumulate safely, because historically breaking beyond here has been generating a price expansion. However, on the first attempt of trying, we reject from here. So we've already had this first attempt of trying get rejected. 2017 showed us that these attempts can get rejected 3 times even. But the key thing here is that we do manage to reclaim this green moving average as a support. Sooner or later, that's essentially going to be the goal for Bitcoin, breaking this green moving average in the future. But for the time being, price stability is necessary at this orange moving average, and so far so good, because we've seen a flick up in price action quite recently. So going forward, essentially, if we construct this range in this way, then that's essentially where we're consolidating in, and that's essentially where we need to continue to consolidate going into September. So while we have consolidated for 60 days, perhaps we need an extra 60 days for this to really be a healthy consolidation period, for that to be a consolidation period that enables a breakout to this region into the parabolic phase of the cycle. And of course, this is going to impact the propagated moving averages to bring us closer to a bull market peak that comes sooner rather than later. However, it's a moving target, isn't it? As we've been seeing in my previous videos on the pi cycle moving average, this is going to be impacting and moving all the time. But the closer we get, because price is going to be essentially going like this, the target is going to start to have narrower shifts, and the moving target is going to slowly but surely get honed in on, and we'll finally be able to predict where the bull market peak is going to be. We are still definitely far away from that. We're just waiting for this reaccumulation phase, first of all, to continue going sideways, because that's going to reduce the rate of acceleration in this cycle, and then later to break out from there, to then challenge this green moving average and break beyond it, and then finally enjoy price expansion in a parabolic fashion to new all-time highs and beyond. That's the goal. Those are the checkpoints. Thank you so much for watching this pi cycle top indicator update. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.